What is an asset? An asset is anything that can potentially put money in your pocket. To put it another way, assets are things that make you money. Here are 15 assets that are making people rich. Number 1, stocks. Owning stock in a company means you own a piece of that company. So if you buy 1 share of Apple stock, you would technically own 1 tiny piece of Apple. If that company does well, the value of your stock will increase because the company is now worth more money. If the company doesn't do well, your stock might lose value because the company is worth less. If you buy enough shares of a company, you may even get voting power. This allows you to vote on important decisions regarding that company. Number 2, bonds. Bonds are loans that you make to a government or a corporation. When you buy a bond, you are lending money to that entity for a set period of time at a fixed interest rate. At the end of the term, you will receive the principal back, which is the amount you initially lent. For example, if you lend $1,000 for 5 years at a 5% interest rate, you will receive $1,000 plus $50 every year for 5 years. Number 3, real estate. Real estate is any property that is land and anything permanently attached to it, like a house or building. The value of real estate can go up over time due to inflation and demand. And when you rent out real estate, you can earn rental income from the tenant. Number 4, mutual funds. A mutual fund is a type of investment that pools money from multiple investors to invest in a wide range of securities, such as stocks, bonds, and short-term debt. By investing in a mutual fund, you become a part owner in all of those assets that the fund has invested in. Mutual funds are often referred to as a one-stop shop for investors who don't want to spend time picking individual investments. Number 5, exchange-traded funds. An exchange-traded fund, also known as an ETF, is similar to a mutual fund in that it invests in a range of different securities. The difference between an ETF and a mutual fund is that an ETF trades on the stock market. This means that the price of an ETF fluctuates throughout the day as it is bought and sold by investors. ETFs are generally considered to be more tax efficient than mutual funds because they generate fewer taxable events. Number 6, rental properties. When you own a rental property, you collect rent from a tenant who lives on the property. You can use this rental income to pay expenses related to the property, such as property taxes, insurance, and maintenance. Any additional money left over is your profit. Number 7, business ownership. If you own a business, you own that business's assets. These could include things like equipment, inventory, and accounts receivable. In addition, owning a business can give you the right to enter into contracts and agreements that can benefit you financially. Number 8, cryptocurrency. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They are decentralized, meaning that they are not subject to government or financial institution control. Some popular cryptocurrencies include Bitcoin, Ethereum, and Litecoin. Cryptocurrencies can be volatile, but they have the potential to appreciate in value over time. Number 9, precious metals. Precious metals such as gold and silver have held their value for thousands of years. They can be stored in a safe location and can be liquidated quickly if needed. Number 10, collectibles. Collectibles such as stamps, coins, and rare items can appreciate in value over time. They can also provide enjoyment and satisfaction to the owner. Number 11, intellectual property. If you own intellectual property, you have exclusive rights to use it in a way that benefits you. For example, if you own a patent, you have the exclusive right to make, use, and sell the invention that is protected by that patent. Number 12, domain names. Domain names are one of the most valuable types of online assets. If you own a domain name, you have the exclusive rights to use it. You can sell these rights to someone else or use them to build a website and generate revenue. Number 13. Copyrights. Copyright protects original works of authorship, including literary, dramatic, musical, and certain other types of works. If you own a copyright, you have the exclusive right to reproduce, distribute, and display the work. Number 14. Cash. Cash is an asset because it can be used to buy other assets, pay for goods and services, or stored for future use. And number 15. Your time. Your time is an asset because you can spend it wisely to generate more money. If you spend your time learning new skills or acquiring knowledge that can help you earn more money, then you will be able to generate more income. Now let's answer some of the common questions that come up with understanding assets. What assets make you rich? There is no single asset that will make you rich. Instead, it takes a diversified portfolio of assets that generate income to make you rich. This can include a mix of investments such as stocks, bonds, real estate, and businesses. Diversification is key to mitigating risk and maximizing returns. What assets do I need to buy to be rich? To be rich, you need to buy assets that generate income and appreciate in value over time. This can include investments in stocks, bonds, real estate, businesses, or other income-generating ventures. The key is to choose assets that align with your financial goals and risk tolerance. What assets do rich people have? Rich people typically own a variety of assets, including stocks, bonds, real estate, businesses, and other income-generating investments. They often diversify their portfolios across different asset classes and industries to mitigate risk and maximize returns. Additionally, they may hold assets such as luxury vehicles, artwork, or collectibles, although these are generally considered to be less reliable investments than more traditional assets. What are income-generating assets? Income-generating assets are assets that produce regular cash flow. Examples include rental properties, dividend-paying stocks, royalties from intellectual property, and interest from bonds. These assets can provide a steady stream of income and help investors achieve financial independence. What kind of assets should I buy? The best assets to buy depend on your individual circumstances, including your financial situation, investment goals, and risk tolerance. Generally, it's advisable to buy assets that are liquid, meaning they can be easily converted into cash if needed, and that have the potential to appreciate in value over time. What is the cheapest asset someone can buy? One of the cheapest assets someone can buy is a share of stock. Depending on the company, one share of stock can cost as little as a few dollars. Another cheap asset to consider is a bond. While the price of a bond will vary depending on the issuer and the interest rate, they are generally less expensive than stocks. How to build wealth through purchasing assets. To build wealth through purchasing assets, it's important to first educate yourself about different types of investments and the risks involved. Start by investing in assets that are within your risk tolerance and that you understand. It's also important to diversify your portfolio across different asset classes and industries to mitigate risk. Additionally, be patient and don't make rash decisions based on market fluctuations. Instead, focus on long-term growth and be prepared to ride out any short-term market volatility. Is my house an asset? Yes, your house is an asset. It is a physical property that has value and can be sold if you choose to do so. Additionally, if you rent out your house, it can generate rental income. However, it's important to note that a house can also be a liability, especially if it requires a lot of maintenance or repairs. How many types of assets are there? There are several types of assets, including financial assets such as stocks, bonds and cash, real estate, personal property such as vehicles and collectibles, and intangible assets such as patents and copyrights. How do people get rich? People can get rich through a combination of factors, including hard work, smart investing, entrepreneurship, and sometimes luck. Building wealth often involves making smart financial decisions, investing in assets that generate income, and diversifying one's portfolio across different asset classes and industries. Additionally, having a strong work ethic and taking calculated risks can also contribute to wealth accumulation. What are some examples of money-making assets? As we discussed earlier, stocks, bonds, real estate, and businesses are some examples of money-making assets. How to turn a liability into an asset. To turn a liability into an asset, you can follow these steps. First, identify the liability and assess its negative impact on your financial situation. Next, develop a plan to address the liability, such as paying off debt or increasing your income. Then take action to implement your plan and track your progress over time. Finally, once the liability has been reduced or eliminated, invest the money in assets that can generate income and appreciate in value. This can help you build wealth and achieve financial independence. How to tell if something is an asset or a liability. To determine whether something is an asset or a liability, consider how it impacts your financial situation. An asset is something that puts money in your pocket or increases in value over time, such as a rental property or a dividend-paying stock. On the other hand, a liability is something that takes money out of your pocket or decreases in value, such as a loan or a depreciating vehicle. How to tell if an asset will make you rich. There is no guaranteed way to know if an asset will make you rich. However, you can increase your chances by doing your research and investing in assets that have a proven track record of generating income and appreciating in value. Additionally, it's important to diversify your portfolio across different asset classes and industries to mitigate risk and maximize returns. Remember that investing always involves some level of risk, and past performance is not indicative of future results. What assets should you invest in? The best assets to invest in depend on your individual circumstances, including your financial situation, investment goals, and risk tolerance. Generally, it's advisable to invest in assets that are liquid, meaning they can be easily converted into cash if needed, and that have the potential to appreciate in value over time. Additionally, consider investing in assets that generate income, such as rental properties or dividend-paying stocks, as this can provide a steady stream of cash flow. How to buy assets that generate income. To buy assets that generate income, start by identifying the type of asset you want to purchase, such as stocks, bonds, or real estate. Open an account with a reputable broker or financial institution that offers the asset you're interested in. Research and select specific assets that meet your investment criteria, such as dividend-paying stocks or income-producing real estate. Place an order to buy the asset at the current market price and monitor your investment regularly to ensure it continues to meet your financial goals. What are the most valuable assets to own? Some of the most valuable assets to own include stocks in high-growth companies, prime real estate, and businesses that generate consistent revenue and profits. Owning assets that have the potential for long-term growth and cash flow can lead to substantial wealth accumulation over time. What valuable assets should you buy? The most valuable assets to buy are those that align with your financial goals, risk tolerance, and investment horizon. Generally, it's advisable to buy assets that have a proven track record of generating income and appreciating in value. Additionally, consider buying assets that are liquid, meaning they can be easily converted into cash if needed. Why do rich people buy assets? Rich people buy assets for several reasons. First, assets can generate income, whether through dividends, interest payments, or rental income. This can provide a steady cash flow and help investors achieve financial independence. Additionally, assets can appreciate in value over time, leading to long-term wealth accumulation. Moreover, owning assets can provide a sense of security and stability, knowing that you have something valuable that can be liquidated if needed. How to invest in a company. To invest in a company, you can purchase shares of stock in that company through a broker or financial institution. When you buy stock, you become a part owner in that company and are entitled to a portion of its profits in the form of dividends. Additionally, as the company grows and its value appreciates, so does the value of your investment. How to invest? To invest, you can follow these steps. Determine your financial goals and risk tolerance. Open an account with a reputable broker or financial institution. Research and select investments that align with your financial goals and risk tolerance. Invest regularly and consistently, regardless of market fluctuations. Monitor your investments and rebalance your portfolio as needed. Consider seeking advice from a financial advisor to develop a personalized investment strategy. How to make money investing. To make money investing, you can follow these tips. Invest in a diversified portfolio of assets, including stocks, bonds, and real estate. Take a long-term approach to investing and avoid making rash decisions based on short-term market fluctuations. Consider investing in assets that generate income, such as rental properties or dividend-paying stocks. Regularly review and rebalance your portfolio to ensure it remains aligned with your financial goals and risk tolerance. Seek advice from a financial advisor if needed. If you enjoyed the video, please leave us a big thumbs up. We truly appreciate your support. And if you want to learn more about our channel, check out the video linked on screen now. Thanks for watching.